Good morning, trading world. It is January 27, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. The title for today's outlook: Don't believe the hype, or basically the bounce. Now that the Fed day is out of the way, what are we left with? We're left with a lot of volatility in the middle of a channel. We started off the week with an expected move of maybe 15 and some change on the SPY. Now there are 2 days left in the trading week, and the expected move is plus or minus 11 and change. This tells me put your helmet on and buckle up, because the ride is just beginning. So from this point, I can't believe a bounce right now. Until the weekly time frame hits a degree of oversold, don't trust a bounce. And don't trust the lows of 420.76 holding. I want to take you to that weekly chart for a second and point a couple things out. All right. On the weekly chart, we have a 3-year weekly up, and the first thing that I notice, we have a doji candle, which is just a pause candle. It's not telling us, it's not bullish, it's not bearish, it's just a pause candle. So we need to see what happens today to kind of give us clues of where we're going. So anytime you get a pause candle like this, it's indicative that the candle following, whatever that pattern is, that the candle falling or the 2 candles in play after that give us clues of where we're headed. All right, you have that. And like I've been saying so far, we are nowhere near oversold territory on the weekly. In order for us to get to a oversold territory, we have to hit down here around this 25 marker on the RSI. And we're nowhere near it. The next thing, on the stochastic, the stochastics are still far apart and far from the 20 area. So with what we have going on the stochastic here, this tells me that we're not close to the bottom of whatever range we're building or whatever channel we're in. We haven't hit the bottom yet. And it seems like we're still a ways to go before hitting that actual bottom. So, and then let's come back up to the MACD. This could actually be terrifying for bull traders, because on the weekly we're just starting or just getting good into a bearish momentum. It's not all bearish on the weekly because we're still above the zero line, but right now the delta is building and we're getting more and more into a bearish momentum on the weekly. So those are the things that are worth pointing out on the weekly right now. So with all that being said, the weekly is top ranking in order of time frames to follow and pay attention to. And just under that, I'm going to put the 4-hour chart, because if we get a reversal on the 4-hour chart, that takes us back to paying attention to where we could go on the weekly. So right now, as far as today, we have some earnings and news that could pop, and those earnings, along with how the tech sector does, along with financials moving up, that could pop us up. However, I feel it's only temporary. I say these news events could pop us up briefly, but it's my belief that we will continue to have a wild, expansive range until we suddenly break lower, breaking through the lows, causing a panic sale, getting that capitulation, and hopefully putting that weekly chart into that oversold territory. I don't see us having a true bounce until that weekly chart hits oversold territory. On a side note, the Bitcoin trade is coming to a close. We got to 38,000 and a half yesterday, not quite 39,000 that I was looking for. So between today and tomorrow, I'll be looking to exit at least half the position, if not all of it, on that Bitcoin trade. Now, let's get to levels to watch for today. All right, here we go with the key levels for today. Starting off on the resistance side, we have Jack resistance at 434 through 435 area, Queen resistance 437 through 439 area, and King resistance 442 through 445 area. On the support side, we have Jack support at 431 through 429. We have Queen support at 425 through 420 area. Then the King support area in the 416 to 410 area. Yesterday proved that there are a lot of sellers waiting on us up here around this 443 through 447 area. I would even take it all the way up to 449, 450, because that's where our true rip your face off rally lies, breaking above that point. But again, I don't believe we can get that break until we get into oversold territory on the weekly. Once again, keep in mind that that 422 area down here is the lower edge of the expected move. Anytime we get up under this 429 area, it does act almost like a magnet, and we kind of get drawn into it once we start getting close, anywhere near 425. Somewhere around there, it begins to draw us in. Now, the channel that we're currently in on the larger time frame is 453 all the way down to 425. If we should so happen to break that 425, the next channel, we've already kind of peaked below it. So the next channel bottom below that is going to be that 416 area. Now, let's get into the scenarios for today. All right, the first scenario is going to be the expansive range day structure. And what looks to play out today, we could look to set a decision area or upward boundary around the queen resistance area, going up here before kind of getting knocked down, and then pushing higher again, pushing those boundaries higher before falling again. I'm not even going to get into probabilities today because it's all so jumbled closely, but this is the most probable scenario that I'll be preparing for today. Let's get into the next scenario. The next scenario is the rounded reversal day type structure. If we continue to build positive momentum in the shorter term time frames up to the 4-hour time frame, we could get a continued takeoff toward the queen and possibly the king resistance area, where we'll find our midday chop and pretty much go sideways during the middle of the day. And as always, the thing to look for on these rounded reversal days is the divergence that starts pretty much almost from the opening, whereas price action is moving up, but your indicator starts to move sideways to down. You'll see that on both of these while price action is going up, and the same with volume. You'll see volume diverge as well. And that lets us know that the second half of the day will get that reversal, usually with the same amount of energy as we spent going up. We'll see that same amount of energy going down most of the time. But I want to mention there are times like today where you want to pay attention to internals. You pay attention to the internals because the divergence may not be as pronounced in internals, and we would get where we would see something not as a deep reversal on the second part of the day. The energy that we spent coming up doesn't quite have to play the same. And there are some keys to noticing that, and it's very detailed. It's hard to explain here on this video, but there are certain things that you can watch in internals in your advanced decline line that you would pay attention to, and it would kind of give you clues to kind of spot that second half reversal may not pay you back the same energy. But there are very, very minute details that you have to pay attention to. That is the second scenario. All right, the last scenario is going to be our trend up day type structure. And in order for that to take place, we got to get a little momentum here before the opening so that we can definitely have a decent size gap up open. And from that point, you want to watch for the fade. If we begin to get the fade back towards yesterday's close, which was 433.38, if we can find support on or before yesterday's close, this is where you want to get long with your call spreads and your bull put spreads, and take advantage of the first part of the day, because we usually see a pretty nice trend up during that first part of the morning all the way to lunchtime. And then at lunchtime we usually get our midday chop or sideways price action. Coming into the second half of the day, we'll get a head fake, which looks to continue the morning trend, and then we'll fade going back into the close most of the time. So that is the trend day up day structure. And I'll say that today the probabilities are so jumbled that you have to keep an alert for all three scenarios. You have to be paying attention. You know, the first, do we get the gap? If we got the gap, then are we fading off of the gap, or we're going to try to fill the gap? You have to kind of take things step by step that way in order to take advantage of how today would play out. And regardless of how any of this plays out, remember, any rally, any pop up, don't trust it. Not until we get into a oversold territory on the weekly. Until then, we can't trust any pops up. They are all to be sold. That's it for today. I hope this helps. As always, please know and define your risk, and profit will follow. Wishing you a great trading day.